Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Monday, September 19th, 2016, and this is the Daily Report for Gold and Silver. We do have higher pricing in the precious metals markets pretty much across the board today. We have gold currently trading up about $3.45. That's when you look at spot 13.13, roughly in that area. When we look at COMEX 13.16, so as you can see, that premium between spot and December is shrinking. It's now down to about $3. But also notice the net change in COMEX futures puts it up about 0.5%, up about $6 on the day. When you compare that, of course, to spot gold, that only up about 0.25%. Now, silver really had a dramatic showing once again today. First, COMEX up almost 2% on the day, 37-cent rise at 19.23. And then lastly, spot silver up over 2 cents at 19.15. Let's take a look at our first chart. So traders, I do want to begin today's show by looking at our daily chart. This is COMEX futures, and the one thing that I find most interesting in terms of the moves over the last couple of days is the fact that it does appear as though this critical level, this key level that we talked about on Friday, will hold. Now this level is a rough level from about, call it 1310 to about 1300. Market currently trading at 1316.50, putting it up about $6 on the day. Now when we look at a candlestick pattern, it is simply a bullish harami. Harami is pregnant in Japanese, and it refers to an inside trading day in which for a bullish harami, at least, the criteria is first that the market has been in a downtrend, meets that criteria. Long red candle meets that criteria. And then the final candle of this pattern would be a small bodied candle that occurs on the inside or inside the body. It has to be the body, not the tail, of the prior candle. So here's the body of our prior candle, and we can certainly see that we have an inside trading day in that way. Now, it is comparable, or comparable, I should say, to a Western Technicals inside trading day. That's all they've termed that. So the harami and the inside trading day have very, very similar markings, but they also have similar expectations, and that is, with this particular type of pattern, we look for confirmation. Confirmation would be that on tomorrow's trading activity, we have a green candle with a higher high and a higher low. I'm drawing it in real roughly, but it would look something like that. That, of course, would trigger a buy signal in the market. In terms of key reversals, it is not the strongest of the two-day patterns. A much stronger one might be a piercing line. You get that here, although you didn't get the follow-through. But this is a strong piercing line, or an engulfing bullish. An engulfing bullish tends to be the strongest. This is an extreme case of an engulfing bullish here. So of all the key reversals or pivot points, bearish harami is not the strongest of them, but it is what we have today. And here's my sense. If in fact the FOMC meeting, which is scheduled to kick off this week on the 21st, the conclusion or the announcement is made that there will not be an interest rate hike, well, then traders, my sense is that we're going to see the dollar go down, and we're going to see premium, which had come out of gold over this last week. And think about it this way, that as recently as a week to a week and a half ago, we saw this market tracking at about, 1357. So we've seen it lose intraday about 40 points and then find support at this key area. My sense is that if the announcement that's made by the committee is that interest rates will remain the same, or stable, I should say, then I would expect to see a spike back up, and part of this premium that was eroded come back into the market and do that rather quickly. So we are looking for a place to position ourselves from the long side, and based upon that, we want to look very closely to see if we get follow through on tomorrow's trading activity. And so traders, how about silver? Dynamic move today, up 2%, 38 gain, 1924. This, of course, is COMEX futures. We're looking at a daily chart. Now, obviously, if we go to the long side in gold tomorrow, I'm going to want to issue a buy signal or a buy trigger in silver. Silver, a much stronger pattern, as we just talked about the different types of key reversal patterns that one can see within the market. Probably the strongest of the two-day patterns is the engulfing bullish. Criteria for that is after a defined downtrend. We've certainly seen that. Small or medium-bodied candle, red, and then a larger-bodied green candle, which totally engulfs the open and close of the prior candle. Of course, to take that call, you have to have confirmation. Confirmation on all of these two-day patterns, bullish patterns, I should say, is always going to be higher high, higher low, higher close. Basically something like this. So with the FOMC meeting scheduled to get started on the 21st, meaning Wednesday of this week, and statements will be forthcoming, of course, the following day, we could see the precious metals get bid up effectively. And as I said when we looked at our gold chart, effectively what I'm looking for is for this premium that eroded over the last week and a half to enter back into the market. And that, of course, is under the assumption that interest rates remain the same. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review, and we will send out a special trade alert if criteria is met for gold and silver long positions. Have a great day. Bye-bye.